All right, test, test. Let me know in the chat if you can hear me. I haven't done this in a long time. I see a couple of you are chatting here. If you could just comment yes in the chat if you hear me. And for those of you who are watching this on a recording, we'll get all the technicality worked out and then we'll dive in. It's going to be Q&A. So first come, first serve as far as dropping questions. If you have questions about what I'm doing, we can talk about that. If you have questions about what you're doing, we can talk about that as well. Okay, I see a yes here, and we're going to rock and roll. So I'm going to go to the top, and we're just going to go through some questions. So first we have from Mr. Ian here. He says, what's up, guys? Looking forward to this. Question for you, Jason. What is your deal flow process when you make contact with an interested owner? What steps do you take to move the lead down the funnel? Okay, real simply put, let's talk about it. So the deal flow process I have now is different than it was when I started. Okay, so first I'll talk about what it was in going from 0 to 1, because most of you, I'm going to guess, are in that process of trying to get your first deal done. And then I'll talk about what my deal flow process is like now that we've done, a number of deals. So when I started, I mostly made off-market calls. I mostly just banged out off-market calls. Hey, my name is Jason. I am looking to speak with the owner. Real simple, or better yet, if I knew the owner's name, hey, it's Jason, looking to speak with Bob. Talk to Bob. Hey, Bob, my name is Jason. I'm the founder of Brighter Living. Curious, have you thought about selling your property or your business? Just real straightforward, no fluff, no BS, no beating around the bush. I'm putting that shot right across the bow, if you will. In my opinion, that's the best and most effective way. And we still now, I said I would talk about before and now talk about present. We still go through basically the same approach now, having done a number of deals. It really hasn't changed. Direct, straightforward, cut to the chase. One thing I'll say, whether you're getting started or you've done a number of deals, and especially once you have some momentum, invest in getting a proprietary leads list. Invest in getting a proprietary leads list. What am I talking about? I'm talking about an exclusive list of owner names, phone numbers, direct line. If you can get their home address, you could bring in a mailing campaign if you wanted to do that as well. But that really is a great investment, because if you don't have that, then you're really just going off of Yelp. You're going off of Google. You're just going off of the resources that you have online. And while those resources do ultimately work, if you can get that owner's name is huge. And if you don't have the money to spend on a leads list up front, getting that owner's name, if you go on their website and you do your homework and you figure out that the owner's name is Bob or Cheryl or whatever the owner's name is, and saying, hey, it's so-and-so looking to speak with Cheryl. Can you please connect me to her? Hey, it's Jason, founder of Brighter Living, looking to speak with Bob. Can you please place me to him? That goes a long way, because when you say the owner's name with some level of certainty and confidence, the likelihood that you're going to get connected, or, it's almost like if somebody called you and said, I don't know what your name is, but we'll use Ian here because you're the one that asked the question. Hey, Ian, it's Jason. I have a question for you. You're going to be like, wait, who is this? But you're intrigued, right? You're listening. Hey, this guy knows my name. So there's a chance here that there's something serious that we can work through, right? And so knowing that owner's name is huge. It really will increase conversions. Now that we've done a number of deals and we have a reputation, a good reputation in the industry, we use brokers and listing agents or investment bankers. And, depending on the deal size, they categorize themselves via different names, but they're all the same thing, right? It's basically the same thing as a realtor. It's just somebody that lists a business for sale. And so now we have a number of connections with listing agents that we leverage, that know us, that know we do deals, that know we're a potential buyer. And that's something that's helped us a lot. We have done, the first deal I did was off market, came from cold calling. The second deal I did came from a listing agent. And the third and fourth deal also came then from a listing agent. And then the deal I helped my significant other do recently, she did a beauty business, not related to my consortium. That was also on market. But now we have another deal that we're working on right now that we have that came through off-market means. So there's been both that have taken place. And truth be said, it's almost like fishing. The more lines you have out, the more effective you're going to be. You don't think about fishing like a recreation. Think of it like a competitive, hey, I have to feed my family and feed my tribe, or better yet, I'm going to catch so many damn fish I can sell a lot of them, right? So you want a lot of lines out in the water at all times, whether you're going from 0 to 1 or from 1 to many. you want as many lines out as humanly possible. So that means you want to be calling with volume. If you can afford to do an email blast campaign, do it. If you can afford to do a mailing campaign, that's something we haven't done yet, but it's something we're toying around with doing now. You want to be doing that. You also want to make a ton of connections with brokers and investment bankers and listing agents that are industry specific, that list a bunch of different businesses in different sectors. You just want all the relationships you can build, and you want to cast as many lines out as possible and have as many different pieces of bait out there with hooks on them in the water at all times. That's just going to increase your deal flow. Okay, so that's really the 101 on how we go about deal flow. Real quick, I haven't done one of these lives in a long time, but if you all are liking the fact that we're doing a Q&A tonight, if you thumbs this thing up, I'd appreciate it. It helps get the algorithm going. I am trying to get this channel to 10,000 subscribers. We're close, so hopefully y'all can help me do that. That'd be great. I appreciate it. Okay, let's see. Were there any other questions you had here, Ian? You said, what's my deal flow process? When do you contact an interested owner? And what steps do you take to move the lead down the funnel? So let's talk about moving it down the funnel now, right? Once you have an owner that says, and we're going to assume for a second we're dealing with an off-market deal, which a lot of you are going to do for your first deal. That's how I did my first deal. It was off-market. Okay, so for an off-market deal, you have to take a leadership role because you don't have a broker or an investment banker leading you through the process, or rather leading the seller through the process. So you have to take that leadership position, okay? So in that case, what you really want to then do is say, look, great, we're interested. We'd love to learn more. Next, I'm going to need your last 3-year P&Ls, your last 3-year balance sheets, and your last 3-year tax returns. Tax returns are the key. If they'll send you and first, before you do that, disclaimer, you're going to want to sign an NDA, a non-disclosure agreement. Okay, a non-disclosure agreement. Your lawyer will help you put together a very simple NDA. It's not complicated. For those of you who are clients, we supply you with an NDA, but you really don't need my program to get an NDA. Okay, they're all over the place. Any lawyer worth his weight in salt who's a corporate lawyer has an NDA that you can use. So you want to send that NDA to the seller. The seller will sign it. If it's a mutual NDA, you'll sign it as well. And then at that point, you're going to have the passing of the baton, if you will. You're going to have the back and forth, the ping pong effect of, you make a request and then they send you documentation. You make a subsequent request, they send you more information, right? So first you may ask for trailing 3-year tax returns. If those tax returns look decent, you may follow up by asking for trailing 3-year P&Ls and trailing 3-year balance sheets. And that's really what you're going to need to get the process started. Key thing here, you need tax returns. Tax returns are the key. You can forge P&Ls, you can forge balance sheets, you can go in QuickBooks and make inputs and create gobbledygook, create fiction, but it takes a lot more chutzpah, a lot more courage, a lot more carelessness to falsify your tax returns. Okay, you can go to prison for falsifying your tax returns. And most of you know, and I'm sure sellers know, that the Biden administration has massively increased the number of IRS agents that are out there looking for fraudulent items on tax returns. So by getting tax returns, you really are getting the most trusted form of financials available. And this is what you want to base your offer on. You want to base your offer on tax returns. All right, we can talk more about that if you want. But really, once you then get the tax returns, and perhaps you've had 1 or 2 follow-up discovery calls where you're asking questions about the tax returns, you're asking questions about the operation, management, the growth of the business, what's working in the business, what's not working in the business, who the competitors are. Of course, you're doing your own market research as well. You're always doing your own market research. You're always, fact checking, if you will. Okay, I know it's become a popular phrase, but you're fact checking. So you're not just taking a seller at face value. Okay, you're doing your own research, seeing if it actually makes sense what you're receiving. And then if you like what you're hearing, if you like what you're receiving, if you like what's being put forth, then at this point, you make an offer, either an asset purchase agreement or a stock purchase agreement. And there are pros and cons to both. I won't go into the details of that right now. I've made some content about that. Punchline, though, is asset purchase agreements are more favorable for you as far as tax benefits and keeping liabilities at the front door, whereas a stock purchase agreement, if you're buying complicated contracts that the business has, and or if you want a smooth transition post-close, then a stock purchase agreement is going to be better on that side. But really, the punchline is those are the base steps you're going to go through before making that offer. Once you make that offer, now you're negotiating. Eventually, both parties agree, hopefully, on a purchase agreement. Everyone signs it, and then it's time to go raise capital. So that's basically the whole process from, hey, how are you doing, through the point where you ink the contract. Hopefully that answers your questions. Okay, let's go to the next question here. And I see there's a number of you here. Appreciate you all being here. If you don't mind throwing a thumbs up on this stream, I really appreciate it. And we're going to go to Michael here, who asked the next question. Okay. Michael says, could you expand on what you should look for in an industry expert? Somebody that is currently employed versus full-time consultant versus in between jobs. Okay, let's talk about it. Industry expert, in my opinion, is the most important piece of your deal-making team, especially if you don't have a lot of industry experience going into this new venture. Okay, it's a different animal if you've already been in the industry working at a C-suite or a managerial level for a number of decades or at least a decade. But if you're like I was when I started, where I didn't have any experience in the manufactured housing sector and then didn't have any experience in utilities, if you're starting from that end of the continuum, then an industry expert is freaking key. It's absolutely paramount. What I look for is as follows. One, I love it if the individual grew a business in the sector I'm entering, and then exited profitably for a 7-figure plus exit. Okay, that is the first one I'm really looking for. Somebody that started a business, grew it, and then sold it for 7 figures or more. That's number one. Number two is if that individual then went to a large corporate player and worked in a senior level management position or a C-suite position, that's fantastic. And in many cases, what will happen is you'll have an owner who will grow a business, sell it to a regional player, and then as a part of that process, the seller will then get, merged into this big corporate player and will assume a senior level management position and then work for that buyer for 1 or 2 or 3 or 5 years before then, say, retiring or basically hanging up their boots. That is the perfect 1-2 because that individual will have the knowledge of how to grow from nothing and to reach that point where you exit for 7 figures plus. But then he or she will also have that experience of having worked in a larger corporation or a larger enterprise, and they see how the bigger world works. They see how a more sophisticated company works with regards to SOPs and HR and management and a bigger sales organization and all of that. So this individual, if they have both that, rugged experience of having grown a company from scratch and then having sold it, but then they also have worked with a big corporate player, that's really an individual that's at the top of their game. Okay, that's really what I recommend. On top of that, I would say if the individual is local and if the individual no longer needs an immediate payout, but is an individual that really is looking to give everything they have in exchange for the opportunity for some serious financial glory down the road, that is fantastic, right? So if their calendar is pretty damned open because they've already made plenty of money and they don't need a quick payout ASAP, but rather they're able to think from the long-term perspective, and they want to help you build something meaningful, but they don't want to have to take all the risk at this point. They candidly don't want to have to work 40, 50, 60, 70, 80, 90, even 100 hours a week. That's really the industry expert I highly recommend. That would be the perfect candidate. And of course, they have to have strong ethics. They have to be able to pass a background check. They have to be able to pass the snuff test. Okay. You need to investigate these individuals, whether it's a lawyer, accountant, an industry expert. Don't think just because they went to a fancy school or because they have a good resume that they're automatically clean and, up to the snuff. Do your own homework. Okay. I would ask individuals before you bring them onto your team to, authorize a background check be conducted. And then I would pay the $25 through one of those sites that are out there. There's a bunch of them available. We use one of them. I forget the name of it, but you can go find one. Do a formal background check. Okay. It's so worthwhile. Make sure before you go into bed with someone that you know that they're clean. Okay. It's pretty understandable. I'm sure you can relate. Now that's that. Let's see here. So that was Michael's question. He says, I've experienced problems with recruiting or coming up with agreement. What should a deal with an industry expert look like? Look, when I started, I really just sent an email, and I talk about how to do this with those of you who are clients, who I see at least one of you, Mr. Dogru, is here, who's a client, right? So in my program, I show you the email I sent to clients, but here's all it is. I'll tell you, it's really not rocket science. I basically just send an email to industry experts or to my team, rather, once I've solidified them and say, hey, I'm so excited for you to be on board. I want to present to you as soon as we form our entity. I'm going to be presenting to you, X% in the parent company that is going to be making acquisitions in XYZ sector. It is my hope that we can build this business to $1 billion enterprise, at which point you're, say, 2% of the business would be worth $20 million. That's what we're trying to build here. And I really look forward to issuing these shares or interests, depending on it's a corporation versus an LLC. I look forward to issuing these shares to you upon formation, which we will do in the weeks prior to closing our first transaction. Thank you for believing in me, and let's go get our first deal done. Yours truly, Jason. That's basically the email that I send. And that's all it is. It's just an email. And it literally, at the old days, came from my Yahoo email. I mean, it wasn't anything fancy. But if you sell your team correctly in the days leading up to that email coming, they'll buy in. They'll buy in, and they will work, and they will follow you. And of course, it's your job to get that first deal done so that you can actually issue those shares and have those shares have some meaning. And then you go on from there. All right, so that's the process. Okay, we have another question, and I'm just going in order. I see there's a number of them here. I'm going to get to as many as I can. I have another question here. How is the deal-making environment in Tampa Bay, St. Pete area, and in Florida in general? Currently looking in Georgia. Plan to look in Florida next. Truth be said, it is hot here, literally and figuratively. There's a lot of deal activity that's taking place here. Valuations are not particularly cheap because y'all have seen how well Florida has performed over the last 2.5 years. Same with Texas. So there's competition here, no doubt, but there's also a lot of deal flow because there's a lot of people here. You have really four actually major metros in Florida. You have Jacksonville, you have Tampa, which includes St. Pete, you have Orlando, and then you have Fort Lauderdale, Miami. So there's a lot of deal flow. There's a lot of competition, but there's a lot of deal flow. If you're looking for a cheaper valuation, you're going to go to places like the Midwest. But if you want to be in a market that has quick expansion opportunity, then I think Florida's fantastic. But hey, do be warned, if you come into plumbing and HVAC here in Florida, you will be competing with me, and I do have an upper hand. We had an individual that worked with me that looked to do HVAC deals here in Florida, and God bless him, he finally got his deal done. But there were a couple of times where unknowingly I and he were competing on the same deals, and as you can imagine, we got the first look because we were more established. So by all means, come to Florida, but just want to put a fair warning out there. If you come in plumbing and HVAC in Florida, don't be shocked if a deal you're looking at, I have a better look at. Okay. Anyways, we proceed. Next, can I get a loan with a work permit? No visa or green card. Okay. So basically for this, you need to get with an immigration lawyer. That's the simplest way I can put it. There used to be an ability to get a green card when you got an SBA loan. That was prior to the old pandemic, and then things changed. So prior to the pandemic, you could get an SBA loan, and when you got the loan, if you're a foreigner, you locked in a green card with it, and you could come over to the States and do business. And it was great. And I know people that did it. The pandemic happened, all of that changed, and they're starting to open it up again, but I don't know the current status or state of that. Get an SBA loan and get a green card with it. I don't know the current status of that. So you're going to need to speak to an immigration lawyer. Usually you can get some free advice for the first hour. Okay, next. Can an illegal immigrant do M&A? That's a good question, man. Again, I think you're going to have to talk to an immigration lawyer on that one. You may want to call from a landline or better yet, even a phone booth. Okay. And if it's a landline, don't let it be yours. Okay. I don't know the answer to that question. I digress. Mr. Dogru. All right. What's the current SBA loan interest rates? And let's say it gets up to 10 to 25%. At what percent does it not make sense to take on an SBA loan? That's a loaded question. Okay. Well, first of all, the first question is not loaded. Currently, SBA interest rates, we actually have several term sheets for the deal we're looking at right now. Rather, depending on whether it's variable versus fixed interest, you are basically at around 8% to 8.25% or 8.5%. If we lock in our term sheet here quickly, we're going to lock in that rate prior to Mr. Jerome Powell and co. with the Fed raising rates by ostensibly 75 to 100 more basis points. Okay. I wouldn't be shocked if interest rates got up to about 9.5 or 10% by Q1 of 2023. And then I anticipate that at about that time, they'll level off. And I think at that point, the economy will be a little bit screwed up. And I think they'll have to turn the dial the other direction. And I think it'll slide down. That's a prediction. I can't be guaranteed, but that is my prediction. You say, at what interest rate does it not make sense to take on an SBA loan? I mean, that's the question that's a loaded question because it's completely dependent on your deal. I mean, let me give you two examples. Let's say in one example, you're buying a business that at a 10% interest rate on a 10-year fully amortizing term has a 120% DSCR, meaning you only have 20% coverage over your loan with your free cash flow. You're barely just covering your loan with only 20% extra to do as you see fit. Okay, in that environment, I mean, if that was at a 10% interest rate, you can't really afford to go much higher, right? By the time you're at 13%, you're probably underwater. Okay, let's use another example. Let's say there's a deal that you were currently buying at a 400% DSCR at a 10% interest rate on a 10-year fully amortizing term. In that environment, hell, you could have the interest rate go up to 20%. And I don't have a loan amortization calculator in front of me, but I know that you would still, I'm 99.9% sure, you would still be easily covering your debt service because you started with a 300% DSCR, which stands for debt service coverage ratio, right? So it's all about the deal itself. It's not really one of those that I can say to you, oh, this is the answer. It's dependent on the deal. It's also dependent on, you know, what is your personal net worth? What's your personal liquidity? Could you pay off the loan or the vast majority of the loan like that if you wanted to? I know when I got started, I could barely, when I did my first deal, just making my mortgage at the very beginning was, a challenge. I did it, but, it wasn't like I was just, the money wasn't just raining on me. I look now several years later, and if I needed to make a huge payment down on one of my loans, it's a different animal now, right? Because I have more cash flow and I have some cash reserves. So things have changed. As you develop, things change. So it's really a loaded question. I would need to know more about your situation to really be able to give you a proper answer. But it's important to be aware of the real thing is it's important to be aware of how much debt could your deal take on and how much would the interest rates need to rise before it would really start compromising your deal. What I will say on the other side of things to talk about high interest rates is there are less buyers right now. Somebody asked a minute ago what the climate is like here in Florida. In the last 3 to 4 months, we've started to see that buyers are starting to fall off. They are starting to fall off a little bit. There are buyers that are getting a little bit nervous. I've said this before and I'll say it again. To me, right now smells a lot like Q4 of 2020. You remember what happened in 2020, right? You remember what happened in spring of 2020? A certain event started in Wuhan and spread around the world. Okay, so by Q4 of 2020, that's when the election was an unknown. That's when the virus was all over the place. That's when everyone was in their basement. Okay, everyone was terrified, and I can tell you that I was able to do really the first deal that Brighter Utilities did. That's the first deal we did with BU, and I think the only reason I got that loan done, yeah, because I had no real experience in utilities. I mean, honestly, I had no right to be doing that deal in some respects. Yet I was able to secure the financing. And the reason why I think is because there were hardly any other buyers that were out there competing in such a war-torn environment. Times were questionable back then. And so that's really, I think, what led me to get that deal done. So I like the current environment now. Is it more volatile? Yes. Is it more uncertain? Yes. Are there less buyers out here? Yes. High risk, high rate of reward. High risk, high rate of return. That's kind of that is the environment we're in right now. So that's that. Okay, we're moving along. If you have questions, drop them in the chat. If you're liking this live stream, I appreciate it if you give it a thumbs up. It helps the algorithm. I'm trying to get to 10,000 YouTube subscribers here, so help me out. Do appreciate it. Okay. Packer Property says, Jason, what's the best loan to buy a business within the U.S. while living abroad and being a non-American citizen? It's the same, God bless you, internationals. Truth be said, is a lot of things got more challenging with the pandemic. It's just the truth. It was a lot easier to get a green card with an SBA loan prior to the pandemic than it is now. So you're going to need to talk to an immigration lawyer and you're going to need to go through that proper channel. I am not a international specialist with regards to securing capital here in the United States. Okay, Mr. Mark says, for a 20-year-old with a thin credit file, little to no income history, but a solid deal thesis, is it better to go through a bank or do 100% seller finance? By the way, nice job picking HVAC. Okay, so let's talk about it. Firstly, I did my first 2 deals without much income history, without a great credit profile. And I did my first deal at 88% seller finance and 12% investor capital. And then my second deal was done through the SBA. Those are my first two deals. The first deal was Brighter Living. And then the second deal was my first deal for Brighter Utilities, which got me here to Clearwater, Florida, where I am talking to you here this evening. So, truth be said, I'm not terrified on your behalf for the fact that you don't have a robust credit history, a deep bank account, and a ton of income experience. For both of those financing options, whether it be seller finance or SBA finance, you can get the deal done without having a robust financial background. Now, I'll be very blunt with you. You either have to be sharp or be rich to get your first deal done. You either have to be sharp or be rich. You can be rich in a bumbling fool. You'll get the deal done because you have enough net worth and liquidity and assets to make the lender feel comfortable. It's like, hey, this guy may not talk all that sharply, but he has a whole bunch of money. No problem. Here's the loan. Okay, no big deal. Whereas if you're starting where I started, where it sounds like you're starting, then you do not have the luxury of being the dumbest guy in the room. If you're broke or close to broke, then you need to be sharp. You need to binge my content or the content of other individuals who are actively out here doing deals, who understand the climate of securing finance in the 2020s, and you really need to be sharp. I don't want to blow smoke up your butt. And you have to have a proper deal, and you need to know what you're talking about in that industry, and you need to conduct yourself like a true professional. But if you do those things, whether it be seller finance or SBA finance, it can be done. In my personal life, gives me certainty that it can be done because I did it twice. Once with seller finance, once with the SBA. Now, will you need 5 to 15% down in cash? Yeah. With the SBA, you need a minimum of 5% cash as a down payment, which you can raise through friend, family, or an investor. Okay. And then for seller finance, anything goes, right? Anything goes. I'm a believer that most times out of 10, if a seller is willing to sell you their business for most, if not all seller finance, that's dodgy. That is a questionable thing in and of itself. Most good businesses, because they're low on collateral, the owner is going to want to sell for the majority of the purchase price being cash. Okay, so normally for first-time business acquisitions, the SBA is the preferred path. Whereas for a first-time acquisition in the real estate world, remember my first deal was Brighter Living. That was a mobile home park in Nebraska. Seller finance was a great path there because hard assets, the deal's largely collateralized by those assets and by the land, but the tax benefits for a seller are massive if you do seller finance. You defer so many taxes by doing seller finance as a seller. And so if there's a lot of collateral, then seller finance can be a great path. But if you're dealing with a cash flow rich, asset poor acquisition, then don't be surprised if the seller basically says, I'm not seller financing this thing to you. Maybe I'll provide 5 or 10 or 15% seller finance on the back end, but I'm not going to give you 80% of the deal in seller finance. Give me some cash, baby. In which case, you take the deal to an SBA lender and do the deal through the SBA. There's a lot of you that say, oh yeah, 100% seller finance on my first deal. I mean, sure, anything's possible, but I don't believe playing the lotto is a wealth creation strategy. I'm a believer in odds, in mathematical odds that lead to likelihood or a lack thereof. Meaning, if it's a 1 in 100 that it's going to work, I don't want to bet the farm on it. Okay? Doing a 100% seller finance deal, if you're buying a cash flow rich, asset poor business, not high likelihood of that happening. Okay? Take it from somebody who has experience. Not to say it can't be done. I've done a 100% seller finance deal. My fourth deal was 100% seller finance, but that was my fourth deal. I knew what I was getting into, and it's a different animal. Okay? So for what it's worth. Okay, 1 second here. Let's cleanse the gullet. By the way, if you'll thumbs this up, I appreciate it. And if you drop your questions, I'll try to answer them. All right. Let's see. Sam says he likes the format. Cheers, man. Mr. Jordan says, hi, Jason. Thank you. You're welcome. How to buy HVAC, plumbing, and electrical companies without having a master license yourself? Is this a problem? No. I could lie to you and say yes and keep you out of the business, but truth is there's plenty of meat on the bone in utilities, so I will not lie to you. I will tell you I will tell you the straight truth. It's not a problem, my friend. Okay? What you do need to do, however, is you need to secure the license well in advance. You basically need to, when you're building your deal team, also find your license holder. Now, here's the thing. In the United States, a license that works in Florida does not work in Georgia. Now, an individual that's a license holder in Florida can get a Georgia license, but being licensed in Florida does not allow you to operate in Georgia. And so it's really important up front that you find a you basically define your geographic, area. Maybe you say, "Hey, I'm going to do my first deal in either Georgia or Florida," let's just say. In which case what you're really looking for is a license holder in the sector or sectors that you're going to go into that has the license for both states or for all the states that you're trying to penetrate. Now, I'll be honest, there's not a lot of guys that have licenses in 10 states, though there are qualifiers whose literal job in the world is to get licensed in 15 or 20 different states. And then you can just use them as as the one-stop shop. Those guys do exist. But usually, to be honest with you, they're already contracted by a big company that's, partnered with a private equity firm. So, yeah, the licensing is a real component. It's an extra barrier to entry, but that's why I love the utilities because there are a number of barriers to entry that make it difficult for somebody to get into that business. But then once you're in that business, you have a moat around you. I've talked about this on a lot of my older YouTube videos about the importance of getting into businesses and sectors that have inherent moats around them. It's what helped me survive in 2020 when so many businesses and real estate owners were going bankrupt because of all of the economic chaos that took place in 2020. You have to remember, I did my first deal in 2019, and then 2020 came right afterwards. And had I not done a great first deal that had a clear moat around it, I wouldn't be talking to you on this live stream, or maybe I'd be talking to you from a ditch somewhere under a bridge, talking to you about all the mistakes I made that led to my bankruptcy. You know what I'm saying? So it's really important that you get into a sector and a business that has those inherent moats around it. Licensing components are a moat, and yes, you can get around it. I don't have a plumbing license. I don't have an AC license. I don't have any licenses, but I have connections and agreements with individuals in those respective sectors that do have those licenses so we can operate legally and pull permits and do all that. So that's the deal. All right. Okay. That's that. I'm going to try to get to all your questions, and I appreciate you all being here. Haven't done one of these lives in a long time, but it's fun to do this. And if you all are liking this, I'll try to do these more often. So let me know if you're enjoying this. And again, keep dropping your questions. And thanks for all the support. And keep on throwing the thumbs up on this thing as we try to push this channel up to 10,000 YouTube subscribers. Okay, if you're liking the stream as well, share it with somebody you know who likes business and M&A. Okay, Mr. Jordan Ryan says, "Hi, Jason." Oh, I already read that one. My bad. Brandon Velasquez says, "After putting together team and outside firms, I'm not a believer in outside firms for your first deal. I don't believe in accounting and law firms, external accounting and law firms for your first deal. I've made a lot of content about why. So I disagree with your premise, but I will continue. Raise money before the first deal or find first deal and then raise money for it, if not 100% seller financed. Two parts to this. My response is actually threefold. Number one, I'm not a believer, in fact, of partnering with an accounting and a law firm for your first deal. I've talked about why. I'll leave it at that. Number two, you're acting as if there's a high likelihood that your first deal is going to get 100% seller financed. I think that's a bad premise as well. I'm not trying to bust your balls here, Mr. Velasquez, but to be frank with you, I don't believe in the premise of betting on your first deal being 100% seller financed. I think the odds of you doing a first deal that's 100% seller financed are very low. And even if you do a deal that's 100% seller financed, oh, by the way, where's the working capital coming from? How are you going to pay anyone that helped you close the transaction? How are you paying closing costs? Okay, you're going to need capital from somewhere. I believe a lot of individuals, and there's certain names out there that talk about 100% seller finance and make deal making sound really sexy, and they sell you all this stuff. But in practicality, there's a lot of problems with 100% seller finance deals. Okay, it's sold as a pipe dream and the solution to all things, but I'm telling you from actual practical experience, is a guy who makes the vast majority of my income from my actual operations, 100% seller finance is a bit of a pipe dream. And again, it's coming from a guy who's done a 100% seller finance deal. Okay, I've done a 100% seller finance deal, actually, and I had to go on the record and say, damn, I never thought I would do it, but I did. I bumbled my way into a 100% seller finance deal, and I'm still telling you, I wouldn't bet the farm on having that be the way your first deal gets done. Okay, but now your real question, and this is a really important one for all of you who are into capital raising, and all of you need to be into capital raising if you're trying to do a deal or more deals. This is a really important one. Do you raise capital first or find the deal first? The answer? Undoubtedly, you find the deal first. You find the deal first. Now, you should be building relationships with investors and lenders alike before you find the deal of deals. You should be calling lenders and investors and saying, hey, my name is so-and-so. We're actively looking at acquisitions in XYZ sector and the ABC geographic area. And I wanted to introduce myself and share a little bit more, da-da-da-da-da-da. Introduce them. Let people know who you are. Let them know what you're looking at, what kind of deals you're looking at. Share about your deal team. Share about the kind of deals you're passing on. That's a great one, by the way. I made a video about that yesterday on my YouTube channel. How important it is to tell lenders about the deals you passed, why you passed on those deals. Build those relationships, but don't ever actually ask for the money for your first deal until after you have an awesome deal under contract. And the reason's simple. Unless if you have a ton of credibility from a different life, no one's going to want to give an unproven deal maker capital before they have a proven commodity on the table. Your only true leverage, if you started the way I did, basically was broke, had very little industry experience, no industry experience, honestly, and didn't have an MBA. I mean, I went to a good school, but I studied psychology. Okay. So I wasn't exactly a credible guy in the M&A world when I started. Okay, the only way I was able to raise capital was by finding a deal first. And then the capital gloms onto the deal because it's a great deal. I'll put it this way. Imagine this is a magnet. This is the magnet that's attracting capital. Capital is attracted to the deal. If this is the deal, the capital is attracted to it, not the other way around. You're using the deal itself as the main exhibit that you're leveraging to raise capital, right? Hey, this deal has, XYZ characteristics and it's in, ABC market, a growing market. It's in a, LWP sector, this awesome sector that's growing rapid, great sector, great location, great existing management team. It's being purchased at under 3 times earnings. Exceptional thing about the deal, exceptional thing about the deal. You're just laying it on, all the exceptional things about the deal. And that's really what attracts the capital to your deal. Okay, so that's a big one. Doing it the other way around is not something you're able to successfully do until you have a track record. Okay, huge investment groups, yeah, they can go start funds. I know there's people teaching, nobody's how to do funds. My honest opinion is your first deal should be a syndication. Find the deal, raise capital for the deal, do that once, do that twice, maybe do it a third time. And then once you have a track record, yeah, you can go raise capital up front. I know there's alternative forms like search funds, and we could talk about that. But truth be said, if you want to keep the vast majority of the equity in your pocket, let the deal do the talking and let the deal do the capital raising for you. Okay, that's that. Okay, somebody says a nice thing. Duder's from Santa Monica. Cheers to Santa Monica. Used to live in Westwood, California. That's where I went to school at UCLA. Missed those days. Used to surf right up there at, I think it's Will Rogers Beach, just north of Santa Monica. So I miss those days. I miss those days a lot, but I don't miss them too much because I'm very happy here doing deals in Florida. David Faith says, hey, Jason, how do you determine the amount of equity you will offer for a deal to potential investors? This is poker, my friend. Okay, truth is, this is poker. How much can you get away with? And how much can you justify as far as your value proposition? How much is the deal worth? At what price point are you buying the deal at? How much operational experience do you have in the sector, you and or your deal team? And then, candidly, how many investors are you talking to? How much competition have you built for your deal amongst investors? The best way to raise capital is by having a lot of investors fighting for a limited number of spots in the capital stack for your deal. Okay, so it's all about the negotiation. It's the art of the deal, I know that's kind of high uh, a high level answer, but the truth is there is no right answer. It's what you make of it. But I'll say this, all of that being said, I will tell you, getting your first deal done, as long as you keep the majority of the equity, get it done. Your first deal is not about getting wealthy in and of itself. Your first deal is about giving you the platform to create wealth in future years. Now, of course, your first deal has to stand on its own 2 feet because you don't have other businesses that can help out your deal if it doesn't do well. So your first deal is super important to get right, but it's not super important that you keep 90 or 95% of the equity. If you can keep 50.1% of the equity and have that deal be a good deal, that's a win. That's a huge win because now you're able to leverage that existing deal that you did to get you to do subsequent deals. You can use that first deal as a case study. It's a credibility builder. It's a platform from which you can go on and raise more capital. And when you do more deals, you can have a little more leverage now to keep a greater percentage of the equity in your own back pocket and be a little bit more, what? A little bit more stern in your negotiation with investors. Okay. If you're on the 1 yard line and an investor wants a little more equity than you want to give, but you're on the 1 yard line, give the guy a little something special. Take care of him. Get the deal done. And then go from there. That's my advice to you. Where are you on your journey to a $1 billion valuation? When will you achieve this goal? So we are, where are we? I want to be very transparent on this answer. What we've essentially done. So first of all, I think we can achieve the $1 billion ambition by the end of the decade, which has always been my goal. Do it in the 2020s. I believe we're on path to do that. What we've essentially done, and it's funny, I practice what I preach. I've built a very strong case study now in Tampa Bay. We have our Clearwater office. We have our Tampa office. We're working on a third deal here in a third location, a little south of Tampa. And really what we're looking to do as we wrap up 2022 is really demonstrate the ability to do a powerful thing in a given market. Basically, it's our case study for this is how we're going to consolidate a market. And here's how we're going to build a lot of market cap, boom, in say 1 or 2 years. And what we have now done is built relationships with a number of investment groups and dare I call them private equity firms and all the big boys. And they're watching us and we're having conversations with them. They're seeing what we're doing. And what we're going to then go do in probably 6 to 12 months from now is have more conversations with them and basically say, hey, here's what we've done in the last 18 months. Show the financials here, show the track record here. And here's now what we want to do in Atlanta, Dallas, Nashville, Houston, Charlotte, etc. Help us do it and work a deal. We'll give you this. We're not going to give up that, yada, yada, yada. Same exact thing that we've talked about as far as raising capital from investors, but now at a bigger scale where instead of raising $50,000 checks, we're raising, 8 figures at a time. And then we're going to deploy that capital at larger scale in some of those aforementioned markets in the next 3 to 5 years. By 2027, 2028, I'd like to be in hopefully 8 to 10 markets. I mentioned some of the ones I want to be in, basically that Sun Belt / Southeast region. And then by 2029, I want to be in a place where essentially we have just about built enough revenue and Ebitda to be worth that which we're seeking, clean things up, tighten up management. And by the end of the decade, we're really looking at a competitive buyer or to float it, depending on a public market. We'll see about what we do at that time and depending on market conditions and all of that. But the punchline is, and I think I titled this live this. It's actually a great interplay into the title of this 6th episode here of a live that I've done. The game is not linear. To be very clear, you don't grow like this. The growth pattern is not linear. It looks a lot more like this. It is exponential growth. That's what M&A in a roll-up play through M&A is essentially about building this, which is a parabolic growth. It's about parabolic growth. We've already probably doubled our enterprise value by doing a number of deals here in Tampa Bay. Okay, so that is, a doubling, if you will. But that's not what we're after. Are we at or very near 8 figures? Yeah, that's basically where we're at now. But 8 figures doesn't start with a B. So now what we do is say, hey, we, deployed X, let's say, I don't know, I'll be conservative. We deployed $4 million worth of capital and we quickly, increased it by 2.5 times and created $12 million worth of enterprise value. And now we're going to go, we need X number of trucks per quarter deployed in all of these different locations. But first we have to build headquarters in all these different great locations within the Southeast and the Sun Belt. And we need to, facilitate all these operations being built out infrastructurally by 2027 so that we can tighten them up in 2028 and 2029, boom, and have a play at exiting at the end of the decade. So that's really our plan. And I do believe if we execute, we'll be at, near, or perhaps even above the $1 billion ambition from which I set back when I started. So that's currently where we're at. Okay. Thank you for the question. I do appreciate it, Mr. Steve. Dave asks, out of all the implementations you've put into action, which one has had the greatest effect on increasing revenue? M&A. The fastest way to grow revenue is buying. Buying revenue is the fastest way. The second fastest is paid advertising when done exceptionally well. But M&A is the fastest. M&A would be one, and then paid advertising would be number two. Okay, gonna hang in here for a few more minutes, and then I'm gonna move on my merry way. I've got a deal call in a little bit, but we'll go for a little while longer. If you've liked this, if you're not subscribed, subscribe to the YouTube channel. Thumbs this thing up if you're appreciating the Q&A. If you want me to do more of these, we can. And I appreciate you being here. Let's keep going. The one thing I've noticed, you guys aren't afraid of the uncertainty in the markets. Noticed you guys thrive in it and plow through the uncertainty. I don't know if you're talking about Brighter Utilities or what, but yeah, generally speaking, if you're talking about me, then yes, it's true. We have proceeded amid uncertainty. Because what's your alternative? Life's short. What else are you going to do? Market conditions will never be perfect. If you're ambitious and if you value life, you understand how short life is. I mean, I was 27 years old just the other day. I'm already 31 now. It's so weird. I mean, life happens so fast. I have gray hair in my beard now. I didn't have gray in my beard when I started. Life is fast. It's tremendously fast. You don't have time to wait for a perfect moment. You have to create the moment. The end. That's the truth. For a person living at home with their parents, how much money should you save up for M&A? By the way, I have no bills to pay. If you can keep a part-time job working nights or working remotely, honestly, if you can save up 10 to 15,000, I think you're good enough to go. If, however, you have a family, a wife, and all of this, and you need to quit your job entirely to get into the world of M&A, then I think you need to be closer to 50 or 100 grand, depending on your cost of living. It's really about you reverse engineering your personal P&L, right? And your personal balance sheet. How much are your monthly expenses? What's your overhead? And, what do you feel you need? At minimum, I think you should give yourself a year's worth of runway. Okay. I'll go out and say it that way. I think you want to have a year to get your first deal done. If you really hump, I think you can get your first deal done in under a year. I've been able to do my first deal when I started Brighter Living and Brighter Utilities in under a year. Okay. And I think you can do the same. One sec. I need to turn on the AC. It's getting hot in here. And I don't mean that as a weird pun, but it's just getting hot. So let me crack on the AC and then we'll keep on answering questions. One sec here. The old school air conditioning unit is going to fire on. And we're going to be back at it here in 1 second. Keep your questions coming. I appreciate all of you being here. And let's keep going. So 1 sec. So Jordan says, thanks, man. I'm in Boston. Good deal. Packer Property says, Jason, after closing the first deal, what usually happens days after closing? What are the things that need to be done or changed? Okay. Right after you close a deal, the first thing you have to do is tell the employees that you're the new owner. That is the first task. That is the first task. You have to let everyone know, hey, this is what's happened. It's preferable if you can do that with the existing old sellers, hand in hand, if you will. That's preferred. If you and the seller or sellers, face the employees together and show a unified front, that is the preferred way of going about that. If it was more of an estranged transaction or if the seller is out of town, then you get to handle that on your own. And I've been in circuit with the seller there, and I did it alone. I've had two of both. I've done multiple, I've had each ways take place. But that is the first order of business. The second order of business is usually to do, and you can have, if you have an assistant or a staff, you need to call all your vendors, you need to call the utilities companies and all the providers and update. This is assuming you do an asset deal. You have to give an update on your new EIN, the new legal entity, and all that mumbo jumbo. So one of the benefits of doing a stock deal is you don't have to go through all that. But if you're doing an asset deal, you have to make about 1,000 of those types of calls. And then really, it's about getting under the hood and truly understanding the business that you bought. Because of course, while you did your diligence and you did everything you could up, ahead of time to learn about, the company that you bought, you really don't know exactly. And those of you who have bought a company before know this. You don't know exactly what you got until after the deal closed. So it's about getting under the hood and really understanding what you got. Okay, so those are the main items of business. And then it's making sure that you really keep, if you're buying, okay, let's back up. There's two kinds of companies that you're ultimately going to acquire: stable businesses and distressed businesses. Okay, if it's a stable business, you probably want to keep it going. So in that case, it's about putting your arm around people and helping the staff feel good about the transition. Whereas if it's a distressed business, you may be going in and letting people go. You may be going in and making massive changes almost immediately. It depends. Okay, but those are the two types of acquisitions you'll ultimately make. So depending, those are the two paths that you're really going to be operating through. Okay, let's continue. Love the stream. I was wondering if you're looking for a deal hunter. To be totally honest with you, I used to have 6 or 7 deal hunters. Now I really have one, and we are more effective and efficient with one than we were with 7. Anything's possible. You are welcome to email info@jasonpaulrogers.com if you would like to open that conversation. But I am not really looking for a deal hunter, because usually having a whole bunch of people calling on your company's behalf, they say a lot of goofy stuff. They misrepresent you or your business. They can compromise your credibility and your brand. So not so sure I want to go in that direction, but never say never. What are your thoughts on more complex lending strategies in the capital stack, such as mezzanine financing? For SBA deals, you really won't need a mezzanine finance. Uh, you won't need mezzanine financing, to be candid with you. As you move into the commercial world, you might need it. You might need that 5 or 8 or 10% of the capital stack. It's really a mezzanine loan is basically called a bridge loan. It's what bridges the gap between the first position bank loan and the final bit of cash that is injected via a down payment. That mezzanine bridge finance is kind of what bridges between the two, for those of you who are curious. It's really not usually going to be needed on your first deal or even your second deal. So I don't think it's that important for most of you to think about, but it's good to be aware of what it is. So if nothing else, you sound financially literate. That's my response there. How do you estimate closing costs with the SBA? How much should you expect to have in cash at close? The first is dependent on, the size of the transaction. And usually they roll the financing costs into the loan. So you actually don't really pay much out of pocket. You usually only pay a couple grand at closing in closing costs. So usually not that much, because if there's a larger loan origination fee, they usually will work it into the loan. So you actually don't pay it out of pocket. You just finance it. Okay. Now, the second half of your question is a little more interesting. You said, how much should be expected to have in cash at close? This is not a simple, this is not a simple question. Okay. This is important to understand. It's completely dependent on the kind of business you're buying. It's completely dependent on the monthly and weekly expenses this business is going to be taking on, combined with, are you buying the age receivables? And does this business operate with large cash flow cycles or very tight cash flow cycles? I'll give you 2 business examples. Business A is a hair salon. A hair salon has literally no aged receivables. A gal or a guy goes in for a haircut. They get their haircut, they pay for their haircut before leaving. The business is never owed any cash. Business B is a large contractor. Let's say it's a general contractor. They help build huge $1 million facilities. That general contractor may have to wait 3 months in some cases to get paid, which means that general contractor has to be prepared to essentially cover their expenses for 3 months before getting paid. So in that event, you better have at least 3 months worth of all of your expenses in the bank at closing, especially if you didn't buy the age receivables. Okay. So it's not that simple of a question. You have to understand the kind of business you're buying and the cash flow cycle of the business. I could talk a lot about that question, but that's the punchline. Okay. Brother, I'm 18 and I just got an NDA to sign to check the books. I have an industry expert, but what shall my next step be if the financials check out? Well, we already talked about that, to be frank with you, Mr. Gus. Punchline is if the financials really check out and if you have a deal team, then it is time to make an offer. I think one of the big mistakes people make is they don't make enough damned offers. How are you going to get your first deal over the goal line if you do not make an offer? So if you like the business, if you have a deal team, and if you like what you see, then it's time to send over, at minimum, a term sheet. And really, for smaller deals, if it's a sub $5 million first deal, and by the way, I recommend that your first deal be under $5 million, then it's better if you can just move right to an APA, an asset purchase agreement. So that would be my recommendation for you, sir. Send over the old APA. Send over an offer. And how do I go about getting a lawyer and an accountant to work on a success fee basis? Okay. So you cut the steps, man. That's what you're telling me. You shorted the steps. Okay. You're not prepared to make. I retract my prior statement. You are not prepared, sir. You need to have a deal team in place before you go out there into the marketplace and look at deals. Because, let's look at what you've done right now. And I don't mean to put you on blast, Mr. Gus, but you know what? What doesn't kill you makes you stronger. So listen closely. You met this seller. Let's say you made a good impression. He gave you financials, or he's about to give you financials. And now you're in a position where, candidly, you should be ready to do a deal and make an offer, but you're not ready because you don't have a lawyer and you don't have an accountant. So you really don't even know if what you're looking at is worthy of making an offer, much less how you would even craft a legal document to make said offer. So you're not ready to rumble. You need to go back to the drawing board and follow the actual steps. Okay, you have to have a deal team in place. Unless, look, Gus, if you're a trust fund kid and your parents have given you $100,000 that's sitting in your slush account, okay, I shouldn't be so judgmental. Maybe, just maybe, you're a trust fund kid. Maybe you have $100,000 in your checking account. Maybe you've been selling, let's just say, baseball cards all through high school and you have a whole bunch of cash in your account. I shouldn't even make the expectation that you're a trust fund kid. But let's just say you have a whole bunch of cash. If that truly is the case, then you can pay for a third-party lawyer and a third-party accountant to help you go forward. But assuming you're not a wealthy 18-year-old, or at least wealthy given the age of 18, then you need to have that deal team in place. Okay, that's really that. And how do you go about getting a lawyer and accountant? Man, there's a lot of videos I've put that go into that because it's a fairly in-depth process. But the punchline is get a recruiter a package on LinkedIn and make your LinkedIn look really professional, and send out a whole bunch of emails or messages rather to accountants and lawyers who have a real track record. Okay, that's the punchline. Mr. Antonio Rios, a old school client, if I'm not mistaken. How's it going, partner? What are your thoughts on Ty Lopez's buying distressed brands? I think Ty Lopez is a smart guy. I don't follow Ty super closely. I candidly don't follow anybody super closely, but he seems to have a very clear investment thesis. He is leveraging a skill set that he and his team has in the form of digital marketing and creating basically a digital brand and marketing around legacy brands. I think what he's doing is smart. I think he's a smart guy. I didn't love the way he marketed himself back in, the day, the old me in my garage thing. But you got to give it to the guy. He created a lot of notoriety for himself, and everybody knows if I say Ty Lopez, most people here know who I'm talking about. So the guy's been very successful. Not the exact way I would have wanted to go about it, but at the same time, I'm not going to hate on the guy. He's a hell of a lot further down the road than I am. So I tip my cap to him. I wish him the best. Okay, Sebastian Bullock says, how do you deal with sellers looking to prove funding prior to signing an LOI? I don't get that problem because I am established. But if you're not established, you essentially need to say as follows. And I did deal with this when I was going from 0 to 1. You say, listen, I have partners that are ready to both lend and invest on the right deal. So if your deal meets the criteria that we have, then securing the capital will not be an issue. Now, let's proceed by getting this NDA signed so that I can review the financials and see if we can do a deal. After this recording ends, save that little line, and that is the line you use right there. Okay? And this will, of course, go to my YouTube channel after this recording is over so that you can use that. All right. Greetings. Next, your thoughts on buying a business that doesn't show a net profit on the income tax returns. Don't do it. Not for your first acquisition. Don't do it. It's a really bad idea, my friend. Trust me, okay? Once you've done a few deals and you understand the nuance of what you're doing, and that's a different animal. But from going from 0 to 1, you want line 21 of the tax returns to show significant net profit, okay? Which means you're showing taxable income for the last 3 years of the tax returns. That is what you need. If it doesn't have that, don't walk, run away from the deal, okay? Because when you're going from 0 to 1, you don't have a backup. If the deal doesn't work, you're screwed. And all your reputation goes right down the drain. And you're the guy that went out there and did a bad deal and went bankrupt. Okay? You need your deal to cash flow. If you can't pay your lender, they're not going to say, oh, don't worry about it. Lenders are not flexible. The loan is due on the 5th of every month. Okay? So you need to make sure that there's absolute, clear, and quantifiable free cash flow from which you're going to pay your debt service. No doubt about it. And no matter what the excuse is, if it doesn't show clear and absolute income on the tax returns, run away. It's probably the most important thing I'll say to any of you all night long. Seriously, it's a big deal. I don't want you to go bankrupt because you got sold some pipe dream. All right. Okay. And if they say, oh, seller finance, then say, okay, I'll do it if there's no personal guarantee whatsoever. But the second they start pushing for a personal guarantee, screw you. No way. No way. Okay, I'll repeat what I just said. If the deal doesn't have any taxable income on the tax returns, then there's no way you want to finance it traditionally. And no way I would raise any capital to that deal because you don't even know what the hell you're getting. The only way I would do a deal like that is through 100% seller finance without a personal guarantee. And if the seller insists on a personal guarantee, I would walk the hell away. You don't want to ruin your life over some goofy deal that's ran by a cocaine cowboy that can't even produce profit. The end. A few more questions and I'm going to bow out. I ran into that and they wanted to add back depreciation. I think you're talking about the same thing. They wanted to add back depreciation, to owner's compensation, and all that other stuff to bring back positive cash flow. Yeah. Look, I mean, once you're a nuanced operator, you can make better sense of all of those things, okay? Because there's a potential argument to be made there. But the truth is, until you have operational experience, you don't know. And your first deal is about certainty. There's been a reason, and I'm not trying to brag, but I'm just telling you what's worked for me. There's a reason I've started 2 successful companies in different industries over the last 3 years. It's because my first deal passed the snuff and stood on its own 2 legs. It's so important. You can't gamble on your first deal. It's why I so strongly disagree with the individual who taught me M&A, who many of you know, who happens to live in a very nice castle in Scotland, who basically told me, get your first deal done as soon as possible, no matter what. I think that's terrible, terrible advice. Because if you do your first deal incorrectly, you go bankrupt before you even got started. And if you actually believe in yourself, then you believe in your ability to be successful. I don't need a bankruptcy on my report. I don't know about you, but I'm not looking for one. When it goes down to getting from 0 to 1, deal certainty is the name of the game. You have to be certain your deal is going to freely cash flow after debt service. And if you're not certain, walk away. Now, of course, if you have a ton of net worth and you're just getting into M&A for the fun of it, then whatever. I mean, take risks for all I care, okay? At that point, you're gambling. But if you need it to work the way I did when I started because you're broke or damn near broke, then it has to show taxable income and you have to feel really good about the deal. If you don't feel really good about your first deal, don't do it. And certainly don't sign that personal guarantee or anything close to it. Okay. I do have a video about what happens after closing, by the way, to read the comments here. What are some key things you advise we can do to find and secure a deal team? I mean, look, I've talked about that at length, but the punchline is you have to have a strong vision for what you want to do in the marketplace. You have to have a huge goal and a strong vision. If you have those things, people will follow you. Mine was, look, I'm going to build $1 billion enterprise in the utility sector in the next 10 years, or I'm going to die trying. But I know I can't do it alone. I don't have the legal expertise. I don't have the accounting expertise. I don't have the industry expertise. I know I can do this, but I know I can't do it alone, which is why I'm reaching out to industry experts, accountants, and lawyers like yourself to help me in building this billion-dollar business. That's essentially what you need to say. And then, of course, you have to have strong and compelling reasons why you're the right individual to lead a billion-dollar expedition. And it should rely both on your personal mojo and moxie and everything you have personally, your commitment and your ability to communicate and your enthusiasm, right? They're betting on you, but they're also betting on the sector. Hey, the sector has experienced year-over-year growth. Hey, we're going to penetrate the Southeast because of all the growth that it's going through right now. Hey, we see a unique opportunity to grow in this way that a lot of other players in the industry aren't currently doing. We see, a lot of fragmentation in the industry, which means there's a lot of motivated sellers that are going to be out there. A lot of these current owners are in the boomer demographic, which means they're going to be selling in future years, right? You have to be able to sell why you're the guy and the sector is the right sector. And hey, if we just built this world-class team, we could all create something bigger than ourselves. That's basically the pitch. Okay, let's see what's next. Tips on, I skipped a few. Man, you guys are all, too many questions here. I appreciate the questions. I appreciate you being here. By the way, thumbs this thing up. Share the link with your friends. Help me get to 10,000 YouTube subscribers, and I'll keep on doing these lives. Some thoughts? Leaders, Cody Sanchez say, buy a biz with a fax machine because it means they have weak systems to improve. I know Cody Sanchez. She's done a great job with branding in the M&A world. I don't know her personally, but I've seen her stuff. I don't exactly get what you're referencing here. I understand the idea of I certainly do agree with the idea of buy businesses with aging SOPs. I think what she and you are referencing is this idea of buying businesses that aren't digitized and haven't been brought into the 21st century, and then providing systems and software and SaaS products to cut expenses and to modernize businesses. Yeah, I think there's a major yes. Okay, I think I get what you're really saying. Yes, and yes, I agree with that. And I agree that you can add a lot of value to a business by bringing it to the 21st century. Especially, I think you can add value by bringing a digital presence to businesses that didn't have it. I mean, that's what we did with B&B Professional Plumbing. When we took over that business a year and a half ago, it had basically no presence. I don't even think it had a website. It had basically nothing. And then we came in and we added it. And now we have a Google presence and we have a clean website and, we have, a lot of 5-star reviews and all of this. The phone rings organically because we built that brand. And that's something we know how to do, right? So yeah, that's something I definitely believe in. It's a value proposition, undoubtedly. What is adjusted EBITDA? I have a great video for you. Okay. I want you, after this is done, to, and this is a good one for all of you, type in Warren Buffett's opinion on EBITDA. Type in Warren Buffett and Charlie Munger's opinion on EBITDA. Okay. And just watch that video. That is basically what adjusted EBITDA is. And what, I don't want to give away the punchline. So, you know what? I'm just going to let Warren and Charlie do the talking for me after this video is done. Once the stream is over, take note right now, everyone watching. It's a 3 or 5 minute clip. Won't take you long. It's very worthwhile. Watch what Warren and Charlie have to say about adjusted EBITDA. All right. You'll thank me later. Tips on securing a business line of credit without a personal guarantee. 2 million revenue business. Punchline is to secure lines of credit without a personal guarantee. You're either going to need to buy a business through a stock acquisition, which means you inherit the long-term legacy of the business from a financial perspective. That'll help you get improved financing terms. But then also talk to a lot of lenders. Anytime you want improved terms, the best way to get them is to talk to a lot of lenders. Because the more lender you're talking to, the more you can get them to compete against one another, and the more essentially you can get better terms. If you're only talking to one lender, you don't have a lot of leverage. But if you're talking to 50 or 100, you have a lot more leverage. But the other one is buy the shares of the business as opposed to doing an asset deal and placing the assets in a new legal entity. Because lenders will look very clearly at when the entity was formed. And if you just formed the entity in recent months, they will look at you as a baby business and they will ask for more stringent terms. That's something I had to learn the hard way. So steal that one. That is a free tip and a valuable one at that. What is something you weren't aware of prior to taking over a business during the transitional period? I just gave you one. Actually, I wasn't aware that you could not borrow against a business after you bought it very easily when you did an asset deal, because that EIN is associated with a brand new legal entity. That was a big one. I also wasn't very clear on my first deal in utilities, my first deal for private utilities, and I have a YouTube video coming here soon that'll talk about it. I wasn't totally aware of the cash flow cycle of my business that I bought. And so it got a little tight for a minute after I bought the first business in utilities. It was a mistake. I have a video that's coming out soon that'll talk about that. What's the most you'll pay multiple wise for an established business with great profits, people, and processes, owners willing to stay on as an operator to continue running the business? It's a loaded question because every industry is different. It depends on the size of the business. It depends on a number of things. It depends on the cash flow cycle of the business. All of that matters. It also depends on where current interest rates are at. Okay. One of the things I always advise my clients to do is to build a strong worldview with regards to the industry that they're in. And if I have any current clients that are alive right now on this stream, they'll tell you that in the chat. I always preach this. You need to build your own worldview and view. You need to have your own opinion on your industry, because I know the nuance of plumbing and HVAC in a way that would bore all of you if I started talking about it. Not all plumbing and HVAC businesses are the same, even if they're the same size, with the same amount of income, and they both have strong management in place. Because, hey, some businesses have real tight cash flow cycles, the service side, whereas others are contracting businesses that have net 45-like terms. And even amongst those distinctions, rather they're service or contracting based, who are their clients? How concentrated is their customer base? There's so many types of questions. What market is the business located in? And then, oh, by the way, at what interest rate am I buying the business at? So you can't really say how many times earnings would I be willing to pay? I can tell you I'll pay a little less now than I would have a year ago. All things created equal, I'll pay less now than I would have a year ago. Why? Well, because interest rates are higher. Interest rates are higher. However, I'm in a better position now financially. As a business, Brighter Utilities is in a better position now than we were a year ago. Why? Because we've been around for, gosh, how long has it been? Over 2 years now. Whereas a year ago, we were a lot newer. So on one end, I don't want to pay as much because interest rates are higher. But on another end, I candidly could increase my down payment if I needed to because I have the cash to do it. So, a lot of things change as you evolve and grow. The best answer I can give you, though, is really become a student and aim to become a master at understanding both your industry and doing deals in your industry so that you could get in front of an audience kind of like I am now and talk about all the nuance of why you might be willing to pay more for this, a little less for this, things you're watching out for, things you can do to make it work. You have to build you have to build your own deep carnal knowledge base within your sector. Jordan Ryan says, nice things. I appreciate the kind words. Cameron says, how do you go about retaining a small number of employees, like 10 or less? I get going bigger is ideal, so you don't deal with that. But I'd like to be, but it'd be out of my competency. I agree with your premise that it's more difficult to deal with small businesses than it is mid-sized businesses. You're exactly right. That's a very astute comment. I am a big believer, if you're going to buy a service business or a contracting business, that the number of employees be greater than 20 for that first acquisition. When it's less than 10, it's a situation where basically things can get so small and cliquey. You know what I mean by cliquey? Like everyone's in their little tight group where, if there's a leader of that clique and he says, "Hey, we should go to the competitor down the street," the risk is that the whole fleet of individuals just right out the door after you close the deal. Whereas if you're dealing with, 20 plus employees, usually there's a number of different cliques, if you will. Okay, so even if one clique runs out, the whole company isn't completely, stripped bare. So it's why I'm a believer. I talked about it prior on this stream tonight about how important it is for that first deal to feel right and to actually work. I'm a believer in doing the $2 to $5 million SBA deal as opposed to the $1 million or less SBA deal, because even though it's a larger purchase price, a bigger SBA deal is going to be more stable. I've seen it firsthand. Okay. He has a deal under contract, or she, Catherine, has a deal under contract. I'm working on the business plan, but not the business background. I have $200K down for the payment, but needing SBA to fund the rest. Should I hire a company to help write the business plan and sell my story? The business looks good, but my background is the wild card. How do I get an underwriter to say yes? That's an interesting question. I mean, to be honest with you, if you're not truly capable of telling that story in a compelling way, I think you should look yourself in the mirror. If you're not really ready to tell an underwriter why this makes sense in a compelling way, are you the right person to lead it? I think you have to ask yourself that question. Because I know for me, and don't get it twisted, I feel pretty good about my ability to communicate. All right. But even if I wasn't a strong communicator, I knew the reasons why I was sold on my first deal. I knew exactly why I was sold on my second deal. Now, maybe you work with somebody to help better articulate, but honestly, as the founder, at some point, you're going to need to be strong in sales. I think, you've probably heard of Warren Buffett saying that the Dale Carnegie public speaking course was the most valuable thing he ever did. It sounds like maybe Toastmasters would benefit you, to be frank, because if it's a matter of being able to clearly communicate what you think and how you feel, then I would recommend going to Toastmasters. It's one of the best things I ever did for myself. I went to Toastmasters for 2 or 3 years. Excuse me, my throat is getting dry. I went to Toastmasters for 2 or 3 years, and gosh, it was such a wonderful thing I did for my own development, to be able to better speak and communicate clearly, and to cut out the ums and the ahs and the uhs and the ers. And I'm not saying you talk that way. I don't even know how you talk, but I know I used to talk that way, and I know it compromised my credibility. And by getting rid of that, it improved my persuasiveness. So it's always tough when you have a deal under contract and you have to do all these things right now. I'm giving you some macro advice to think about, some stuff to really consider as you look in the mirror. But all that being said, what I would say to you right now is as following. Do the soul searching and ask yourself tonight, in the next 24 or so hours, if you truly believe you're capable and ready to do this deal. And if you do, then consider working with an SBA loan broker that can help shop the deal on your behalf and help you get the financing and do a lot of the speaking on your behalf. But just make sure you truly feel up for the task. And then simultaneously, I would sharpen my sword if I were you. And this goes for all of you, and it goes for me. It goes for every one of us as deal makers. Always be looking to improve your communication. Always be looking to improve your persuasiveness. Always be looking to improve how you present yourself to the world. It's one of the reasons I wanted to do a live. I haven't done a live on YouTube in a while. I do a lot of lives for my clients, but I wanted to challenge myself in a different way. So, hey, let's do a live. Let's talk. Let's speak extemporaneously. It's really important that you develop that skill set as a founder and deal maker. Are there ways to get out of a personal guarantee on your first deal, assuming it's a solid deal? It's difficult, especially if you have a low net worth, but it is possible. And usually seller finance is the pathway to get that first deal done without a personal guarantee. The SBA is going to require a personal guarantee. Are there any good books or any tips you suggest when first getting started? Let me see if I have it. Let's see here. Let me see if I have one of my favorite books on the shelf. I don't think I do. But this is a great one. Read this and it'll make you feel like your life is is quite insignificant. Alexander the Great. That's a great one. The other one I was going to recommend was Relentless by Tim Grover. Relentless by Tim Grover. That is a world-class book. I think I have it in my briefcase, actually. I'll look. Do you want one sec? Let me see. No, I don't. I don't have it on me. I don't know where it is at the minute, to be frank with you. But that's a world-class book. Highly recommended. And also that Alexander the Great book that you can now see right there. Oh, and then also Charlie Munger's book. Charlie Munger's book is also a world-class book. Okay. If a business is good, then you'd be depending on the former owner's relationships transferring to you. That's true. I agree with you, Cameron. Do you still do dating coaching, bro? No, those were other days. That's back when I lived in Medellin. Those are other days. No, I do not. Deal making pays a lot better. It pays a hell of a lot better. All right. Guys only pay so much to learn how to socialize. Opinion on sellers of businesses wanting to be an industry expert. No, you need an independent third-party industry expert, somebody that's loyal to you. You do not want the seller to be your industry expert because they may sell you fiction in order to get you to buy their company. You do not want to do that. You want to have your own industry expert that you found independent of the seller. That is clear and absolute. All right. No doubt about it. By the way, if you all are liking this, thumbs this thing up. If you know anyone that likes business and M&A, share this stream. Help me get to 10,000 YouTube subscribers. I'm close. I'm trying to get to 10,000. All right. Help me out here. Like this thing, share it, all that good stuff. I appreciate y'all being here. And it looks like we're getting through most of the questions, but let's see. If you have any last questions, drop them now because we've been here for a while and we're going to wrap this soon, but a few more questions if you've got them. Let's see. Thanks for all the value add. Keep up the hard work. Great advice. Thanks for your time. Could you explain a roll-up, how it operates? Yeah, sure. I'll explain a roll-up. A roll-up is basically where you go in an industry and you buy a number of different businesses in the same industry, preferably in a unified geographic region. Okay, so said simply, let's take Brighter Utilities. Brighter Utilities decided it wanted to make acquisitions in utilities. And so we firstly targeted Florida. We've currently done 3 utilities deals in the last 18 months in Florida. We're looking at a 4th right now. We're combining a number of businesses under one umbrella in a tight geographic region. And then we're going to continue to do the same in a number of other locations throughout the Southeast and the Sun Belt. And then after 8 or 10 years, maybe 15 years, depending on what we want to do, at some point, someday, well down the road, we'll package it all up. And down the road, we'll sell it ostensibly for a good, healthy bit of coin. That is a roll-up in a nutshell. Okay. Crawford asking about skin routine advice. You're a shithead, man. I don't know if you're punking with me or not, but it's good to hear from you, sir. And yeah, man, I wash my face in the morning. That's about it. It's good to hear from you, Crawford. And there's a winner right there, Crawford McDonald. There's a guy that is winning out there in the real world doing deals. Cheers. Great to have you. Greetings. When did you have your first joint meeting with the members of your team? And where do you think is a good place to have your first meeting with the whole team? I think the right place is Zoom. For most of you, I think it's Zoom. That's what I did. I did my first deal team meeting on Zoom for both when I started Brighter Living and when I started Brighter Utilities. Worked great. And I'll tell you what I did on that, because it's a really important meeting. You start by re-establishing the vision. Establish the vision. You've heard me establish the vision for Brighter Utilities tonight. Hey, my name is Jason. I'm the founder of Brighter Utilities, and in the 2020s, we intend to consolidate the utility sector and ultimately create $1 billion exit. Okay, establish the vision. After that, I really recommend introducing everyone on your deal team to one another, and then essentially get everyone to start talking with one another and collaborating with one another and sharing contacts and best practices and ideas with one another. That's really what the first meeting is all about. All right. Crawford says, JK, congrats on your deal, man. Appreciate it. Can you use all debt to finance a company with a portion of seller's equity? Anything's possible, but usually you need a little bit of equity. I'm almost running out of my Red Bull here. My throat's getting sore, so we're not much longer in this game. And I see I'm getting caught up on the questions too. So we're almost there, but a few last ones. Why do you care about followers and giving away your game plan? Isn't it better to just do deals? No, I care about followers and I care about building a brand, because just the other day I dropped a video saying I have a deal that I may want to raise capital for. Within 12 hours, I had individuals reaching out to me who were accredited, who were considering investing. So there's very strategic reasons from which I build a brand. Look at, and I know a lot of you disagree with Grant Cardone, or he's a charlatan, or he's this, or he's that, whatever. Say as you will about Cardone. The guy has built a beastly brand that he's turned into a massive multi-billion-dollar real estate portfolio. That's just the truth. You don't have to like him, but you cannot deny that he's monetized the hell out of his audience to help him build a huge portfolio. And in that respect, I think what he's done is very clever, and I am looking to replicate parts of what he's done. Hey, Jason, is the roofing industry a good place to start acquisitions? To be honest with you, I think it actually is. I know there are serious consolidators in the roofing industry. I actually started my career operationally in the roofing industry. My dad owned Connex Roofing Company in Orange, California, where I worked from about the age of 12 to about the age of 20. Learned a lot about sales and marketing and bookkeeping and customer service and collecting on age receivables and all kinds of stuff. It was a great experience for me. Yeah, I think there's a play in the roofing world. Jason, thanks for your time. I understand seller finance. A seller can finance 5% usually on standby when an SBA lender offers 90% LTV. That's true. Can they act as an investor through a separate entity to fill the rest of the gap? Technically, no. In actuality, maybe. But I would recommend you find your 5% cash from a different source. That's my suggestion to you. I would do it through a different source. It's a little too close to the sun. You know, the old Icarus flew too close to the sun story? Yeah, I would say that one's a little close to the sun. Do you acquire multiple companies within the same industry under the same legal corporation? There's a video on my YouTube channel where I show our corporate structure. It's actually not a corporate structure because we're LLC. Corporate means corporation, and we're a partnership, which means LLC based. But you have the parent company and then the subsidiaries that each operate in separate LLCs, and they're all owned or majority owned by the parent company. That's the structure we have. How does it feel to be living the vision from watching QLA videos to doing it in real life? Feels good, man. It feels like I set an intention for myself and I executed on that intention. Now, mind you, I don't follow QLA verbatim, though Pena taught me a lot of things. He also taught me things I strongly disagree with. I've been very candid about both the things I strongly agree with and the things I disagree with. So I don't see myself as practicing QLA, though there are certainly elements to what he taught me that I utilize to this day. But yeah, I'm enjoying very, very, very much what I do. I love what I do. You can ask the people around me. I talk about work all the time. I love what I do, love what I do, love what I do. Cannot say it enough. And for those of you who are super ambitious, who really want to create generational wealth, and who just absolutely have that burning desire to push the hell out of yourselves, I would really recommend getting into this game. I got to say, I would just highly recommend getting into this game. It has been profound for me. It has pushed me. It's been beautiful and wonderful. So I would recommend it. By the way, it looks like old Tony Rios just donated $50 and pushed himself to the front of the line. You got it, Tony. $50, and I appreciate it. Let's see your question. Although First John Osanar says GC is under federal investigation. He may be. I don't know the nuance of what Grant Cardone is doing, and I don't always agree with everything that Grant Cardone does. My point with him prior was just so as to say that you cannot argue that he's taken his brand and he's turned it into, or he's helped parlay it into a huge real estate portfolio. Has he followed all of the SEC rules? I don't know. I don't know. So I'm not disputing that he is or is not under federal investigation, but I am saying that he's parlayed his audience very shrewdly. Mr. Tony Rios, last question. What are your thoughts on making acquisitions in the fence contracting industry and marketing agencies industry? Also, aside from the industry you're in now, what's some of your favorite industries? Okay. Fence contracting. That's interesting to me. It's interesting to me because I've never heard anybody bring up that industry before, but I know it exists. Okay, so I'm always a fan of industries that are a little off the beaten path. My dad used to have a phrase that I think is very shrewd, which was simply, if everybody else is doing it, it's probably wrong. So I like that premise. I would be very interested in the cash flow and the customer base and the number of fence contracting businesses, making sure that there's enough meat on the bone in that industry to really make it worthwhile for a potential roll up. But I like some of when I think about it, just big picture, I think it's intriguing. But obviously, I don't know much about the industry. So that's really the extent of what I can say there. Marketing agencies industry. Marketing agencies are service businesses from what I can understand, right? I'm a decent marketer in my opinion. So I obviously understand what they provide, whether it's, SEO services or Facebook marketing or Google ads or, Tony, I know you're a marketer, a marketing background. There's a whole bunch of different services a marketing agency could provide. I think there's a potential roll-up play there. I mean, I think there's a real play to be had there. The thing that I like about marketing agencies is by and large, it's all digital. So if you wanted to be a workaholic, but also live a little bit of that digital nomad lifestyle, I think in theory you could do it. I think to be a real business, I am a believer in old school. There's a headquarters, people work out of that headquarters. There's actually an establishment to be had there. I think with marketing agencies, there seems to be two types of entrepreneurs that get into that world. One seems to be pursuing lifestyle. Hey, I want to make 10 or 20 or 30,000 a month and be able to live in all these different places. The other is a real entrepreneur. And I guess I think the first step there would be to identify what's the end goal. Is it to build a huge enterprise or is it to create a lifestyle business? Right? When someone referenced prior that I used to teach dating, which is true, right? That was a lifestyle business. I got to travel, I was single, I had a lot of fun. It was a lifestyle business. What I'm doing now, there's nothing lifestyle business about it. I used to live in Nebraska. Now I'm in Florida. I mean, yeah, Florida's a lot more beneficial to one's lifestyle than Nebraska. But the point is, I was willing to go wherever it took to get the deal done. Okay, so I think there's a play in both. But I don't have that much to say about either of them. I think what I could really comment on a little bit more is, are the businesses that you're analyzing in any sector capable of standing the test of time? Do they seem like great businesses? Do they seem like they have great staff? Do they seem like they have great customers? Do they have a great service that their customers love investing in or buying? They're like, let's take book sales for a second. Okay, or like the book industry, selling books. There used to be Barnes and Noble and Borders, right? I think one of them died. I think Borders died and Barnes and Noble still exists. But who's the dominant player now? It's Amazon, right? So what's the premise or what's the point? The point I'm making is industry is important, but being on the cutting edge of that industry and owning a business that's at the peak of its powers within that industry, in my opinion, is even more important than being in the right industry. Look at Netflix. Look at Blockbuster. They're both in the TV and they're both in the TV and entertainment rental business, or at least they were, right? One is extremely dominant and the other is dead. So I think it's not only about the industry, but I also think it's about being at the cutting edge of that industry with the acquisitions that you make, buying the most robust companies in that sector that you can. So that would be my reply to you, Mr. Tony Rios. Thank you for the donation, and hopefully that was satisfactory. BK writes, how do you feel about the upcoming recession? Yes, there will be more deals, but your current businesses will most likely be underwater too. Not necessarily so. Recessions do not hit all markets and all industries equally, sir. You have to keep that in mind. For example, you know what gets sold like crazy in tough times? It's kind of weird, but candy and alcohol. Why? Both relieve stress. So both get sold like crazy. Okay, so it's not, recessions don't hit all businesses equally, not even close. Not even close. So I think it's a lot more, this is what I've talked about a lot in this stream tonight, is about building a worldview within your business with regards to your sector and how you're positioned within your sector to make sure that you withstand the test of time. But you're right, some businesses will struggle, and if not, and obviously some will fail during the upcoming recession. That, I mean, honestly, we're already in a recession. The Biden administration tried to change the definition of a recession, but it's negative GDP for 2 quarters, which we already achieved this year. So we're already in a recession, So, and over, in Q3 of this year, we've had a great period here in Tampa Bay, a great period here in Florida, despite the fact that we just entered a recession here this summer. So, you have to be cognizant not just of the macroeconomics of where we're in and where we're going, but also the microeconomics of how your business and the sector and the local geography will fare, amid those times. Have you heard about Thomas Lemaur? He's been talked about a lot recently by Dan Pena. No, I've not. And I do not really follow Pena. I did way back in the day when I learned from him, but no, I'm not familiar. Do you mentor for equity? No, I do not. And looks like we're almost getting to all these questions here. What are your best tips for identifying attractive industries before everyone else gets into them? Look, I understand there's a desire to be first, but more importantly than being first, I think, is being best. So it's not like I was the first one into plumbing and AC. A lot of private equity guys are already in AC. It's not as much about being first, in my opinion, as it is being the best or being one of the very best. So I'm more focused on competence and excellence than I am being first. Is it a disadvantage to wear a suit in a blue-collar industry? Sometimes it is, yeah. There's a reason I don't dress as sharp as I used to. You want to feel disconnected from your staff? Dress in a suit and tie every day in a blue-collar sector. All right. And with that, if y'all will thumbs this up, I appreciate it. I'm trying to hit that 10,000 YouTube subscriber amount here, and I think this stream should help a little bit. So if y'all can help me, I would appreciate it. And then last question of the day. What exit strategies do you prefer? There's really only 2. Strategic exit to a large buyer, or a float. Float the company and take it public. Those are the only ones. And truth be said, whichever one's paying, that's the one I'm interested in. All right. I appreciate it. I appreciate you all being here. Very last question. What kind of training or courses would you say have brought you the biggest value to getting to where you were in M&A? I learned from Pena. That was useful. What was even more useful is investing a lot of money into the pursuit of M&A. I've said this before. I'll say it again. It was spending a lot of money on my own commitment to M&A that was the biggest investment I ever made in myself. Yes, Pena taught me a lot, but what taught me even more was me just putting skin in the game. Once you're in 20 deep, you usually don't want to just punt that down the road. You know what I mean? So that was the most powerful thing for me. But anyways, I'm going to wrap it. Thank you all for being here. If you'll thumbs this thing up and show it some love, I appreciate it. And I'll talk to y'all on the next one. Take care. Have a great night and be successful. Go make this the best year of your life. Take care now. Bye-bye.